Well, welcome back, friends. Today on Denali Guide, we're going back to basics. How to start out investing, but not the hype, not the headlines, because there's lots of those. Just the real framework that helps you stay grounded.
Yeah. Well, good morning. This is the Denali Guide. As to say grounded, you have to know what's important to you and what is not important, i.e., all the superfluous fluff you find out in sensational stories. You have to find out what's basic. We talked about that my director is going to ask me a question here to put me back on track. Anyway, you've got to develop savvy habits. You just can't copy anybody else's habits. You have to figure out what's important to you and then stick to it. Talking about this is a little advanced. We talk about a journal. This is some of the stuff I keep in my journal. I don't think you ought to keep all that in your journal.
Can I see that?
Yeah.
Let's bring that in a little bit closer so people can see it. Now, this is a form you've created for yourself, right?
Right. And it tells me why I did a certain thing. And that's the important part. That's a part about being savvy.
So if you're interested in this kind of a form, leave a message in the comments below and we'll see if we can't put one together so that if you want one, you can have one. So, Nick, you're always telling people to do your own due diligence. What does that actually mean when you're just starting out?
It means to look at the company, look at the company's track record, take a look at the people who run the company, take a look at the company's business. Are they making buggy whips in the era of AI? You know, I mean, it all depends on where you're going. Right now, oil and natural gas are getting bad mouth on all the sensational stuff. But if you look at the charts, they're very firm. So who are you going to believe? Your lion eyes or these guys who are shouting you over the internet?
So when people say that A is the next gold rush or this stock is going to change your life, 99% of that is worthless. So we've all seen the headlines, right?
Right. And the headlines are basically about public information. Once information is public, it means that all the people who buy and sell stocks have acted on it. So it's basically happy talk.
Happy talk. Well, let's just think for a second. We'll break it down into 3 things for your own checklist. You're reading, you're researching, and you're thinking, right? What's the company? What do they produce? And where's the money coming from? That's where the plan begins, right?
That's correct.
Okay, so let's move on just a little bit. There's the 3 S's: sentiment, stock, and sector. You've got this idea that you want to talk about, the 3 S's. Can you break that down a little bit more for us?
Sure. Let's say I like steel. All right. That's a sentiment. I like it. It doesn't mean I researched it. All right. Now, we got to look at the stock. U.S. Steel was bought out. You can't buy that anymore, but you can buy the ETF for steel, SLX. Now, let's go one more time. The famous Jim Cramer, throwing chairs across the room, said something very prescient. He said, 80% of what your stock does depends on the sector it's in. So if steel is getting good reviews and going up, not just what's said about it, or if coal, let's say Peabody, is going up and everybody's like, we hate coal mining companies, doesn't really matter. The stock's going up. So it's sector. It's sentiment, stock, and sector.
Thank you so much for that. Now, let's look at timing and trends. You also warn people about this. Why are they so tricky?
I think they're tricky when you put absolute rules to them. At the beginning, the trend is your friend, okay? In the middle, the trend is your friend. At the end, it's like an ass coiled at your throat. It's going to kill you. You're going to follow the trend down. So timing, well, let's see. We've just had a strike in the steel industry. All right. So often it says buy the rumor, sell the news. So the company goes on strike, you buy the stock, stock goes up, they settle the strike, the stock goes down. So as a consequence, you have to watch timing, what's logical. The old rule is buy the rumor, sell the news.
And trends can reverse. This is true, right?
What's that?
Trends can reverse. So we have to respect both the timing and the trend.
Trends are cyclical.
Yeah.
Trends are a manifestation of a cycle. So at the beginning, everybody's happy because it's going up.
Yeah.
And at the end, we can't understand why we're getting slaughtered. Bears make money, bulls make money, hogs get slaughtered. So as a consequence, if you overstay its trend, you're going to be dinner.
Okay. Well, let's just take a break for a second and to remind people that this is Nick at Denali Guide. There. What was that?
That's V for victory.
For victory. Okay. And if you like his videos, please do like, subscribe, and share with those who you think might be interested. And if you need more information about Nick and the way he does his analysis, leave a comment below and Nick will get right back to you. So let's move on to step number 4, the transaction journal. And I think you just showed us that, but you also have it in a notebook. Maybe every trade I make, everything I write down, the date it opened, expectation, when it'll close, when I'll close it, either next week or next month or next quarter. And it helps keep you accountable. Can you speak to that for a second?
Yes, absolutely. I write down the journal, the name, the date, the price I paid, why I went into it. And the thing that people don't very often put down is why or when they're going to sell it. All right? Because the real bottom line here is we need to make money. And the only way we can make money is to buy low, sell high. So if a strike comes about and we don't like it, let's say in the copper industry, then we sell our copper stocks.
Mm-hmm.
All right? But you have to stay aware. I think staying aware, staying alive, and due diligence all mesh.
They all come together, right? And this notebook that you have, or the pieces of paper that you keep, they help keep you accountable, right? If a trade isn't working, I don't let it turn into a long-term mistake, is what you said to me.
Well,
I close it small, learn, move on.
People have a bad habit. I bought this trade. I bought Badger Daylight Infrastructure, and it was supposed to go up, but it didn't go up. So I'll just make it, instead of a short-term speculation, a long-term holding. That means I'm losing money.
Right.
Yeah.
So let's take, for instance, a couple of years ago, I was interested in Algoma Shipping.
Yeah, the shipping, not the steel company.
Not the steel company, the shipping company. Since we live in Hamilton, we see the ships come, we see the ships go. And I didn't buy very much, just a little bit to kind of watch what they were doing. And it wasn't doing much and it fell. And it was like, oh, do I keep it? Do I not keep it? But I was thinking long term. And eventually the stock did come up and it's a little bit above what I bought it at. But I'm still not going to sell it. I'm just going to hold on and see what happens next in the shipping industry. As here in Canada, more money's going into steel, more money's going into the whole shipping industry. So that may come back up. Hard to say. But you help me with that. And sometimes we just need someone to show us an outside idea. Isn't that true?
I think so. Algoma is like your bird dog, because it all centers around the Great Lakes. It all centers around steel and heavy industry. And guess who's going up now? Algoma Steel, ASTL. What do we know? I don't know. I was looking up Algoma Shipping, and I noticed that Algoma Steel was going up. And nobody's telling you in your ear, buy Algoma Steel because it's going up. You have to observe. So if you're keeping a journal, not only do you note where you're going to sell it at, but what you're going to note is, was this trade successful or was it not successful? If it was not successful, there's a valuable lesson there that you can teach yourself. Find out why it wasn't successful and avoid that in the future.
So let's say someone wants to start in precious metals. What is step number 1?
I think step number 1 is to read some of the literature, but not on any of the sensational stuff, and take a big company like GDX, which is VanEck ETF of gold mining stocks, and read their literature. Not all of it, just the big stuff.
Now, I know you said to me you start broad and then narrow down. So can you talk about that for a second?
Well, GDX has a tendency to buy all the big names. You kind of want to have a big name to anchor your portfolio, but then you want a smaller company who can go somewhere. In this case, one of my favorite companies is Santa Cruz Silver. They produce silver. They're actually a producer. They're not a prospector. They're a producer. So what I would say is you want a small producer, somebody who can ride the waves.
So let's look at something from a slightly different angle. You read the company's PEA, that's the preliminary economic assessment. It tells you what's in the deposit, how much production is expected, and how long the mine life is. And I like this. You said you don't need a geology degree, just curiosity and patience. And I'm going to add on that. You don't need an accountant's certification either.
Oh, absolutely not. I'm very happy that I got a degree in accounting because it helps me in fraud detection. But for basic investing, you need to read what the company says they're going to do, what they can do, and what they did do.
Okay, so let's close this video off and thinking that this is for people who are beginners, right? Are thinking about it for the first time. What's the big takeaway? The one thing.
Oh, be savvy, do your research. I own a bunch of stocks.
Try that again. We got interrupted.
Okay. You want to start with an exchange traded fund that is in the sector that you're looking for because they own the leader stocks in that sector.
Well, and I think too, we have to remember that investing is a journey. We each of us learn, we adjust, and we stay grounded. Right?
Yeah, well, that's the reason you keep the journal.
Okay.
So you can refer to what your original purpose was and compare how you're doing to what it was.
Okay. So again, if you found this helpful, hit the like button, subscribe to Denali, and share it with someone who's starting their investment journey. Thanks for watching, and as always, stay wise, stay steady, keep learning.
And do your own due diligence. That's Denali's guide. Oh, one more. Fear not.
Fear not. Great. Thanks, Nick. We'll see you next time.